Crypto Hotep here with another investing video. We are on week 67. Feels good to be back. If you follow me on Twitter or on here on YouTube, you saw that I did present or I did send out a note that week 67 was going to wait until this week because me and the family were vacationing as we do every year around that time. And we did the same thing last year around 4th of July. So I always make the update for that week and I delay it until the following week. So we're doing week 67 this week. But as always, guys, before we go to week 67, we take a look back at week 66. But before we do, if you're unfamiliar with these videos, feel free to go to the channel, go to week number 1, where I go through my whole methodology, why I'm doing these videos, and what I'm hoping to gain out of it. Basically, I gave my family a short list of stocks to choose from, companies and brands that they know. They picked the stocks that most resonated with them, or the companies, I should say, and then we use M1 Finance as our broker of choice. With M1 Finance, we created a big family portfolio, and with M1 Finance, you can have sub portfolios or pies within your big portfolio. So every one of my family members has a pie of his or her own stock choosings, and then every week we go through this portfolio. We go through dividend activity, which is my personal favorite, balances, any news that's going on, any analysis that we're doing on stocks and how we're looking at stocks and how we're feeling. If these videos are helpful for you, feel free to like, subscribe, comment. Let me know what you think. It helps the algorithm. It also helps out the channel. So with that being said, guys, and one last thing, by no means is this financial advice. So please do your due diligence when you're looking at stock investments and research. So as mentioned before we go to week 67, let's go to week 66, which is about 2 weeks ago now. Week 66, we were at 25.9615 for the balance. We had a money weighted rate of return year to date of 1.54% positive, dividends earned of $13.82, and a market gain of $18.17. So this week 67, we are looking pretty good here. We're looking at a balance of 26.34 that equates to a money weighted rate of return year to date of 2.60%, dividends earned of now $14.28, and a market gain of $40.61. We've come a long way, and whenever I want to look at something, I always look at the 1 year, and this is where we were this time last year. We are at $700, $765.75. Fast forward, the balance is over $2,000, over $2,500 right now. So again, if you've been following the channel, you know we really don't put tons of money in at one time. It's usually small, gradual deposits of about $15 or so every 2 weeks. And then if we get a bonus pay, then we'll throw a little bit of extra money in there, but nothing too crazy. So let's see what's been going on for the past close to 2 weeks now. So the last time our update hit was around June 26th right here. So everything up we haven't covered yet. So we had a little dividend activity with Kraft Heinz, Public Storage, Pepsi, Domino's, Broadcom, Union Pacific, Texas Roadhouse, and Coca-Cola. With all of these, we did buy $1.50 worth of Tesla here. So with those dividends, we did put it back in the market and we did buy some more Tesla. Now, on July 3rd, we had our regular deposit, as I mentioned, of the $15. We made 4 buys of that $15, or with the $15, I should say. We made a buy with Sony, Costco, Tesla, and then Kimberly-Clark. So those are the 4 buys that we did. And then we received some dividends this week from Vici Properties in our real estate portfolio, or our real estate sector, I should say, of my stocks or my portfolio here of 6 cents. Now, real quick, if you're looking at these dividends payouts and you're like, Crypto Hotep, these are only several cents here. This is only 4 cents. This is a nickel. Like, what are you doing? Well, with dividend investing, especially when you have a small account, this is still considered a small account, these dividend payouts are not going to look so great at the beginning. The big key about the dividend investing is knowing that it's a marathon, not a sprint, and those dividend payouts will gradually increase as you keep investing into those companies. So while these are pennies, the pennies will soon add up to dollars, and the snowball effect will take effect, so to speak. So let's go on and let's go to the portfolio here, guys. So as we always do, we'll go bottom to top. So at the bottom is my wife, but again, she is doing fantastic year to date. Her year to date balance has crossed over 300 now. So she's hit the 300 mark at 301.62. Her money weighted rate of return, that is not a mistype here, 15.36%. She is beating the S&P 500 year to date. Dividends earned $1.30, and then market gain of $27.74. So who or what is keeping my wife's portfolio alive and kicking here? That is Celsius, as we can see here. Celsius is one of the bigger holdings, and year to date, it has earned 79.74% currently. Everything else is red right now, but even though everything else is red, it is slowly but surely starting to break even. Pepsi is only down a little bit over 4%. This has been down significantly. Google has been down significantly, but it's almost break even right here. And then Tesla has been down. We've been in the 20%, the 10%. So we're below 10% right now and trekking to hopefully break even here. So with that being said, if we can get these into the green or near, my wife's portfolio is just going to go parabolic even more so than what it is currently. Okay, let's go to our middle. Our middle is at 310.25 is the balance. Dividends earned of $1.47. Year to date money weighted rate of return of 0.77%. Market gain of about 30 cents. So good thing to see here with our middle, just because everything's starting to get green here. Google up over 20% on Google, right? Starbucks up over 4%. Starbucks, Costco has been one of the most consistent stock holdings of any of our portfolios, whether it be mine, whether it be our oldest, whether it be our middle. Anybody who's had Costco has been in the green in Costco this whole year. That is not financial advice at all, but just saying. Amazon, we're seeing an uptick or a turn on Amazon to the green, to the upside. We're still in double digits, down on Tesla. But Sony, up almost 10% on Sony. And then Target's still trying to find its footing as a company right now. Okay. All in all, as always, I'm good with the portfolio for our middle. Our youngest is staying above 300, almost cracking 350 at 346 and 46 cents. Money weighted rate of return of a positive 2.36%. And that equates to dividends earned of 87 cents and a market gain of $5.29. So very similarly, Tesla, major culprit here, double digit down, but Sony up over 16%. Costco again almost up 10% at 8.63%. Starbucks up over 7.5%. And then Apple down 9%, but very similar to Tesla, where it looks bad, right? It looks, bad, but if you've been following the channel for several weeks, we're starting to make headway with Apple and Tesla. It's just taking a little bit of time, but that looks way better than what it was several weeks ago. Let's go to our oldest. Our oldest is creep below 800, 799 and 15 cents. Money weighted rate of return of a negative 6.77%. Dividends earned of $2.90 with a market gain of a negative 53.23. The reason being is majority Tesla here and then Apple. So we've already covered Tesla and Apple with the rest of everybody's portfolio. The same follows suit here. Now, McDonald's has shown some life, up over 4% on McDonald's. And again, the culprit, the number one, Costco, up over 4.5% on Costco. Not really concerned with these companies here at all. And if you've been, watching or keeping track of these updates, Our oldest keeps a very simplistic portfolio. It's always been about 3 or 4 stocks, nothing too major here, and very, easy to pick, easy to follow companies here. Okay, last but not least, let's look at my stocks here. So I'm very happy with this. My balance is about 877 and 35 cents. Money weighted rate of return, I'm getting up there, guys. 9.88% year to date. Very good. Dividends earned over $7.50. That's $7.74. Market gain of $60.51. So let's just to keep an eye. Let's watch this. So the past several weeks, technology has bled out. You can watch the videos here. But as always, guys, if you invest in good quality companies, things always turn around. I just don't have a crystal ball on when they will turn around, but they will. Case in point, our technology sector, which has things like Coinbase, right? Apple, which is still down for me too, but I also have Amazon, Nvidia, which is just doing tremendous numbers, up over 34% on Amazon, or Nvidia, I should say. Meta, which is up over 25%, Broadcom up over 26.5%, and AMD, just AMD is probably doing the most work here in terms of gains, but it's so quiet. Everybody's focus is on Nvidia right now, and nobody is paying attention to AMD, yet they're pushing all-time highs as well. It's pretty funny to see here. So our technology sector has regained its footing, up over 18% in technology alone. Industrials and energy up over 14% in industrials and energy sector. Consumer staples, we're actually at a negative 2.86%. Again, similar to everybody else's, I have Target. I'm down over 14% in Target, and I believe I bought the dip. I bought some Target stock as well. But as we can see here, Procter and Gamble down over 4%. Church and Dwight down over 4.5%. Kraft Heinz down over 11% for Kraft Heinz. And then, Kroger did have some great earnings. I believe they had earnings the last 2 weeks, if I'm not mistaken. They had great earnings, up over 16% on Kroger. Walmart up over 5.5% here. So the consumers and staples just taking a beating right now. But all in all, still down over 2.5%. So not that bad, honestly. Restaurants and food up over 7.5%. Coca-Cola has always been green this year. It doesn't stop. Texas Roadhouse up over 11%. Domino's Pizza up over 12%. Hershey is turning a leaf here. I believe Hershey, if I'm not mistaken, let's look in here. I think they had a big news event. Yeah, Wendy's CEO, Kirk Tainer, they actually recruited him from Wendy's to run Hershey. So Wendy's former CEO is now going to be running Hershey, and the markets are really liking that for Hershey's future. So good thing to see here. And let's go to McDonald's, up over 4%. McDonald's, Starbucks up over almost 5.5%, and then Smucker's down over 2.5%, but not really worried there. But again, pharmaceuticals, real estate down less than 1%, not worried. Growth stocks, guys, I wish we had more money in the growth stocks. That's the famous last words of everybody. I wish I put more money into a certain holding. I'm glad it's still only 5%, but the gains year to date on this is crazy here. And as a reminder, we have Palantir, CrowdStrike, MicroStrategy, and Tesla. Which one is not like the other? As we can see here, Tesla, again, even for my portfolio, is down over 22%. But because we only allocate a smaller percentage into the portfolio, it's not weighing my portfolio down as much as it is with my other family members here. So all in all, I'm very happy with this portfolio. We may crack 900 in the upcoming week here, which would be nice with gains. But as always, guys, feel free to like, subscribe, comment. We're going to end week 67 at a balance of 26.34 and 83 cents with a money weighted rate of return of 2.60% in the green. Dividends earned of $14.28, guys. And as always, thank you and happy investing.